Hello everyone, welcome to the market opening bell for Monday, 23rd March, your 10-minute guide to the stock market. Middle East tensions remain high. Hong Kong stocks opened low on last Friday, dragged down by declines in Alibaba and Xiaomi. The Seng Index opened 163 points or 0.6% lower at 25,337, briefly recovered 63 points to 25,563 in early trading, then turned down again. Losses widened in the afternoon to 379 points at 25,121, eventually closing down 223 points or 0.9% at 25,277. The H-share index fell 121 points or 1.4% to 8,574. The Hang Seng Tech Index dropped 123 points or 2.5% to 4,872. After the market closed, the FTSE Russell Index rebalanced its constituents. Total market turnover was 342.5 billion Hong Kong dollars. Southbound trading turnover total $139.271 billion, while southbound funds recorded a net outflow of $21.005 billion, the second highest net outflow on record. Net buying includes Xiaomi, totaling $2.459 billion, Alibaba $2.037 billion, Tencent $679 million, Geely Auto $248 million. Net selling include Tracker Fund totaling $13.38 billion. Hang Seng China Enterprises Index ETF $4.175 billion. CSOP Hang Seng Tech ETF $3.63 billion. SMCI $878 million. CNOOC $703 million. Yangtze Optical Fiber and Cable $168 million. Statistics show southbound funds have net bought Alibaba for 6 consecutive days. Total 5.554 billion Hong Kong dollars. Net sold SMIC for 6 consecutive days, total 2.445 billion. Last week, the Hang Seng Index fell 188 points or 0.7% for a third straight weekly decline. The H-share index dropped 97 points or 1.1%, and the Hang Seng Tech Index lost 105 points or 2.1%. Southbound funds recorded a weekly net outflow of 6.329 billion Hong Kong dollars. Hong Kong ADR indicates the Hang Seng Index is expected to open 674 points lower at 24,602 today. Night futures have already broken below 25,000. This will be the third time in the past months that the index tests both the 250-day moving average and the 25,000 psychological level. A decisive break would push the index towards the measured downside target of 24,500 from the complex head and shoulders pattern. Mainland A shares show mixed performance on Friday. The Shanghai Composite broke below 4,000, closing at 3,957, down 49 points or 1.2%. The Shenzhen Component Index fell 35 points or 0.3% to 13,866. The Chinex Index surged, then pulled back, gaining 43 points or 1.3% to 3,352, mainly driven by photovoltaic, energy storage and AI sectors. Shanghai and Shenzhen combined turnover reached 2.3514 trillion yuan. For the week, the Shanghai Composite fell 3.4% to a new 2025 low. The Shenzhen component lost 2.9%, while Chinex rose 1.3%. The renminbi central parity rate against the US dollar was fixed at 6.8898 on Friday, up 77 pips, the strongest level since 25th April 2023. The People's Bank of China announced that the 1-year and 5-year loan prime rates (LPR) for March remain unchanged at 3% and 3.5% respectively, in line with market expectations. This marks the 10th consecutive month with no change. Alibaba released its fiscal 2026 Q3 results. Overall performance missed expectations, causing the share price to drop sharply. Post-results, the stock fell 6.3% to close at 123.7 Hong Kong dollars. Revenue was 284.8 billion yuan, up 1.7% year-on-year, but below the expected 289.3 billion yuan. Net profit attributable to ordinary shareholders was 16.322 billion yuan, down 66.7%. Non-GAAP net profit was 16.71 billion yuan, down 67.3%, far below the market expectation of 28.936 billion yuan. CEO Eddie Wu told the analyst call that Alibaba Cloud's external commercialization revenue for fiscal 2026 to end February officially exceeded 100 billion yuan. Facing long-term AI market growth, the group's AI strategy targets clear. Cloud and AI commercialization revenue, including MaaS model as a service, to break 100 billion US dollars in the next 5 years. Who said global computing power will remain extremely tight for the next 3 to 5 years. Pingtouge's value lies not only in cost optimization, but also in guaranteeing supply of computing power. An IPO for Pingtouge is not ruled out, but there's no timetable yet. For instant retail, Alibaba e-commerce CEO Jiang Fan maintained the 2028 fiscal year target of over 1 trillion yuan in gross merchandise value, expecting scalable positive cash flow at that scale and overall profitability for the instant retail segment by fiscal 2029. Xiaomi launched a new generation SU7 with pricing cut by 6,000 to 10,000 yuan versus pre-sale prices, and announced over 60 billion yuan investment in AI over the next 3 years. The stock fell 8.6% to close at 33.2 Hong Kong dollars. At the Xiaomi Spring new product launch on 19th March evening, founder, chairman and CEO Lei Jun announced new SU7 standard sales price 219,900 yuan, nearly 8% lower than Tesla Model 3. Pro will be sold at 249,900 yuan, and Max version will be sold at 303,900 yuan. All versions are 4,000 yuan higher than the first generation equivalents. Post-launch, Xiaomi Auto said 15,000 units were locked in within 34 minutes. Lei admitted pricing pressure was high due to sharp memory price increases and raw material inflation. Compared with the first generation, the new SU7 standard has over 100 upgrades. Material costs alone rose nearly 20,000 yuan, excluding R&D. With more chips and component cost rises, gross margin for SU7 may be lower than the initial launch. On delivery wait times, Xiaomi Auto stated it has prepared sufficient capacity for the new generation, offering ready-to-deliver cars and priority production. Ready cars are expected to be delivered in 1 to 5 weeks after order lock. First generation SU7 users who complete the upgrades or switch small orders to firm orders will enjoy priority production. Lei also emphasized Xiaomi's strong embrace of AI with over 60 billion yuan investment planned in the next 3 years. Market rumors that the Musk team is making large-scale purchases of domestic photovoltaic equipment, ignited energy storage, and green energy concepts. CATL and CALB surged 8.4% and 5.2% respectively. Hong Kong lithium battery stocks remain active. March lithium battery chain production schedules have fully recovered, combined with the post-holiday trade-in policy and new car launches, supporting full-year lithium battery demand. Current oil price volatility has enhanced the full life cycle cost attractiveness of EVs, potentially stimulating demand. Meanwhile, Middle East geopolitical conflict has further boosted overseas energy storage demand expectations. Hong Kong optical communication concept stocks surged collectively. Yangtze optical fiber and cable rose nearly 10%. Cambridge Technology nearly 5%. The 226 Optical Fiber Communication Conference and Exhibition (OFC) is being held at the Los Angeles Convention Center, with giants Lumentum, Coherent, AAOI, and others all pleasant. This year's OFC sent a strong signal. The explosive growth in AI computing power demand is forcing data centers to completely rebuild their optical electrical network architecture. Other corporate results. Zijin Mining announced 2025 full-year results with both revenue and net profit hitting record highs. Revenue was 349 billion yuan, up 15% year-on-year. Net profit attributable to shareholders was 51.777 billion yuan, up 61.6%. Earnings per share was 1.95 yuan. Dividend was 38 fund per 10 shares. Dividend was 38 fund per share. Overall gross margin was 27.73%, excluding smelting products. Mineral products gross margin reached 61.56%, up 3.59 percentage points, thanks to higher mineral prices and effective control of cash costs per ton. 2026 production guidance was 105 tons gold, 1.2 million tons copper, and 520 tons silver. China Hongqiao released 2025 results with steady performance. Both revenue and profit grew single digit. Revenue was 162.3 billion yuan, up 4% year-on-year. Net profit was 22.636 billion yuan, up 1.2%. Mainly from higher aluminium alloy selling prices. Earnings per share was 2.3842 yuan. Final dividend 1.65 Hong Kong dollars per share. Gross profit was 41.505 billion yuan, down 1.6%. Overall gross margin was 25.6%, down 1.4 percentage points. Aluminium alloy gross margin rose to 28.56%, up 3.9 percentage points, while alumina gross margin fell to 22.2%, down 13.2 percentage points. XPeng Auto reported its first ever quarterly profit for Q4 2025 ended December. Q4 vehicle deliveries was 116,200 units, up 27% year-on-year. Total revenue was 22.25 billion yuan, up 38.2%. Gross profit was 4.74 billion yuan, up 104% year-on-year. Gross margin 21.3%, up 6.9 percentage points. Auto gross margin was 13%, up 3 percentage points. Turned around to net profit 383 million yuan versus loss of 1.33 billion yuan last year in the fourth quarter. Non-GAAP adjusted net profit was 505 million yuan. Full year revenue was 76.72 billion yuan, up 87.7%. Loss narrowed to 1.139 billion yuan versus 5.79 billion loss the previous year. Full year deliveries was to 429,400 units, up 125.9%. Chairman and CEO He Xiaopeng said XPeng is at a historic turning point for physical AI applications. The company will expand global market share of AI vehicles, leap from L2 Plus to L4 autonomous driving, take second generation VLA overseas, and achieve mass production of high-end humanoid robots. Li Ling released 2025 full-year results, although full-year net profit dipped slightly. Second half performance far exceeded expectations, driving the stock up nearly 9% on Friday. Full-year profit was 2.94 billion yuan, down 3% year-on-year. Second half profit was 1.198 billion yuan, up 13% year-on-year. First half year profit rebound since 2022. Total dividend was 56.95 cents per share. Payout ratio was 50%. Revenue rose over 3% to nearly 29.6 billion yuan. Footwear and apparel both up over 2%. Gross margin fell 0.4 percentage points to 49%. Inventory turnover days steady at 64 days. Store increased to 7,609 with net increase of 24 stores last year. 2026 revenue growth guidance was high single-digit net profit margin and high single-digit revenue growth and high single-digit net profit margin. There will be two new listings today. FS Innovation, stock code 3355, closed at $60.1 in Friday's Philip Mart Grey Market, 44.5% or $18.5 above IPO price. Without fees, 100 shares per lot will turn in a $1,850 paper profit. Seng Technology, stock code 2701, closed at 11.79 Hong Kong dollars in the grey market, 9.2% or $0.99 above IPO price. 200 shares per lot will return a paper profit of $198. Trump said he rejects a ceasefire with Iran. Fighting shows no sign of ending. U.S. stocks continue to bottom out on Friday. Their gauge fix rose 2.72 points or 11.3% to 26.78. Dow fell 443 points or 1% to 45,577. Nasdaq fell 443 points or 2% to 21,647. S&P 500 lost 100 points or 1.5% to 6,506. Small cap Russell 2000 dropped 2.3% officially enter correction territory. Nasdaq China Golden Dragon Index fell 202 points or 2.9% to 6,742. Supermicrocomputer plunged 33.3% after its co-founder was arrested on suspicion of smuggling AI technology to China. Mega cap tech weakened. Tesla and Nvidia both dropped 3.2%. Microsoft, Meta, Alphabet and Amazon dropped from between 1% and 2%. Apple fell less than 1%. Iraq declared force majeure on all foreign-operated oil fields. Drone attacks hit two Kuwaiti refineries. Brent crude broke above $112. WTI April futures rose 2.77 or nearly 2.9% to $98.32 per barrel, with a weekly gain of 1.53%. Brent May futures rose $3.54, up nearly 3.26% to $112.19 per barrel, with a weekly gain of 8.77%. The Brent WTI spread widened to its highest level in nearly a decade. Spot gold fell 3.25% to $4,499.36 per ounce, with a weekly decline of 10.37%, hit by stronger US dollar and reports that the US has detailed preparations for ground troop deployment in Iran, raising fears of higher oil prices, inflation and interest rates. Spot silver dropped 6.49% to $68.0995 per ounce, with a weekly decline of 15.55%. Our stock pick today is CALB, stock code 3931. CALB is primarily engaged in the design, R&D, production and sales of power batteries and energy storage system products. It focuses on achieving technological breakthroughs in advanced materials, high-performance battery technology, new battery technology, advanced manufacturing technology, and full life cycle battery management, and has established a comprehensive patent portfolio covering the entire battery industry chain, including battery materials, battery structure, system integration, electrical circuits, BMS, manufacturing process equipment, and battery recycling and regeneration. The group is also concentrating on key technological breakthroughs in all solid-state batteries. It has completed the independent development of core materials such as high-performance solid-state electrolytes. The energy density of its all-solid-state silicon-based battery system has reached 430 watt-hour per kilogram, and it has finished constructing a dedicated all-solid-state battery production line, laying a solid foundation for further R&D and future industrialization of all-solid-state battery technology. Leveraging its proprietary technology and industrialization capabilities, the group continuously pursues higher energy density and stable safety performance in power batteries. It has launched more competitive new ternary and phosphate system products in its deeply penetrating application scenarios such as power energy storage, industrial and commercial energy storage, and residential energy storage, maintaining industry-leading product strengths. In the first half of 2025, the group's power battery installed capacity reached 21.8 gigawatt-hour, up 22.7% year-on-year, ranking number 4 globally and number 3 domestically, with a single month's high of 4.7 gigawatt-hour. Energy storage cell shipments also recorded substantial growth, ranking number 4 globally. Overseas, the group successfully supported the largest power station projects in Latin America and South Africa, entered the supply lists of multiple leading developers and grid companies, and achieved new breakthroughs in its overseas power station business. In the marine sector, it delivered the world's largest oil company's first hybrid power vessel project, and is also involved in the high-end Middle East marine engineering equipment market, secured its first international megawatt-level marine battery system order, and won bulk orders for the Singapore Port electric vessel berthing project, realizing business breakthroughs in multiple new regions. In emerging markets, it achieved volume deliveries in the low-altitude flight sector. The solid-state battery project co-developed with a leading humanoid robot company, reaching a phase milestone, while it continues to expand into rail transit, mining, and other new markets. The group earlier issued a positive profit alert, expecting net profit for the year ending 31st December 2025 to be in the range of approximately 2.025 billion to 2.193 billion yuan, representing a 140% to 160% increase compared with the same period in 2024. This is primarily driven by sustained high growth of its leading technology products in passenger vehicles, commercial vehicles, energy storage, and other fields. Looking ahead, the group will further accelerate its internationalization strategy. On the capacity side, the Thailand base has been successfully completed and it put into production, while the European base officially broke ground in first quarter 2025. With the steady progress of the European base, the group's international delivery efficiency and capability will be further strengthened, effectively enhancing its global competitiveness and brand recognition. Recommended entry price $28, target price $31, stop loss $26.8. I do not hold the above stock.